This is the video demonstration on investments, and in this video I'm going to work the solution to example number 3. Now this example involves the Carter Company, and it says they had the following transactions during the year, and we have several different transactions, and these involve both investments and just, for good measure, I've actually thrown in some international transactions as well. And at the bottom on the requirements, we are required to do the necessary journal entries for these transactions. So the very first transaction occurred on January 1st. We purchased 2,000 shares of Apple stock for $100,000. It says this purchase represents less than 20% and is classified as available for sale. Now, why are they giving us that information? Well, remember from our video lecture on investments, the percentage amount of stock that I own is significant because that will have an effect on how I record the journal entries. And I also need to know how they've decided to classify that particular investment. So I'm going to utilize Excel to do these journal entries, and this very first entry occurred on January the 1st. Now this is an investment. So remember, we have a new asset account for investments, and I'm going to debit investment, and then I'm going to put the name of the company, which is Apple, and then I'm going to put AFS, which stands for available for sale. And the reason that I put the actual name of Apple in there is by identifying these investments, it'll make things easier later on in the event that they actually decide to sell this investment. So labeling these things just makes it easier to find if I have to go back and look for certain things. And I'm going to pay for this investment with cash, so I will credit cash, and the cost is $100,000. So that's the proper way to record the first transaction. The next transaction is on January the 30th. It says that Apple has both declared and finally paid a 25-cent per share dividend. Now, what's interesting about that, this is on the 30th. Now, we've dealt with dividends before, but when we dealt with them before, it was our company paying a dividend. Well, this is different. This is our company receiving a dividend. So now we finally get to see it from the other side of the spectrum, because remember, this time we're the ones buying the stock rather than selling it. So when we have a dividend like this actually makes us money. So I will debit cash to show that I'm receiving the money. And what is this? This is a form of revenue. In fact, it is dividend revenue. So I'll credit revenue. Now, as far as the amount, it depends on the amount per share and how many shares that I own. We bought 2,000 shares, and it's 25 cents per share. So in that case, 2,000 times 0.25, I'm going to receive $500. So that's a pretty good investment that we made. We've already made a $500 dividend revenue on that, so that works out pretty good. The next transaction is on February the 1st. This is an international transaction. Sold merchandise to the Sumitomo Company of Japan. The merchandise was sold for 1 million yen. Payment is due in 28 days. The current exchange rate is 0.0089. Well, this is a sale, and it says payment is due within 28 days. So that tells me that this is a credit sale. So anytime I have a credit sale, that means the company owes me. So that's going to be an account receivable. And then I'm going to put the name of the company, which was Sumitomo. And why am I doing that? Again, labeling some of these things will make it easier later on when we have to back up and start receiving the money and things like that. It'll help us to identify some of the balances. So I'll debit accounts receivable Sumitomo to show that they owe us that money, and credit sales, which is the revenue part of it. Now I'm going to have to figure out the amount. Now I know that it was 1 million yen, but I have to record my financial statements in dollars. So the exchange rate on that date was 0.0089. So 1 million times 0.0089 is $8,900. And I'll debit that and credit that. So that 1 million yen is not quite so impressive when you realize that when it's exchanged into dollars, it's really only $8,900. So that's the proper way to record that on February the 1st. Now, February 15th, the next transaction. We purchased 1,000 shares Walmart stock for $55,000. It represents less than 20% ownership. We're going to classify it as available for sale. Well, that's not going to be too bad because we just had a transaction very similar to that on the 1st. So we will just debit investment, but this time it's a different company. This time it is Walmart. And again, it is AFS for available for sale. We're going to pay for this with cash. And in this case, it said the amount that we paid, $55,000. So that takes care of that transaction. Next transaction is on the 28th. Says that we received the amount due from Sumitomo Company. Now the current exchange is 0.0090. So this is on the 28th. We are receiving the amount due, so we will receive cash. I'll debit cash. I'll skip a space and credit accounts receivable Sumitomo, because since they're paying us, that means we have resolved that receivable. Now here's where the labeling comes in handy. How much? If I go back, right here is accounts receivable Sumitomo, 8,900. So 8,900. But when I receive the money, I might receive a little bit more than that. I might receive a little bit less. Remember, we are vulnerable to those international exchange rates and the fact that they fluctuate. So in this case, it has fluctuated to 0.0090. So that million yen times 0.0090 is now worth 9,000. So you see, it fluctuated, but in a way it fluctuated good for us because we're going to make an extra $100 on this. So that's why I left that extra space there. So we need a $100 credit. And what is that $100 credit? Well, that is simply a foreign exchange gain. Now, how do I know that it's a gain? Well, remember, losses are always a debit, gains are always a credit. So where it's on the credit side, it's a gain. Plus, think about it like this. I was supposed to get $8,900. I really got $9,000. So I got an extra $100 on that particular transaction. The next transaction occurred on March the 1st. We have decided to sell the investment in Apple for $110,000. So, you know, from time to time we make these decisions, we buy these investments, and if the prices change and if it becomes to our advantage, sure, we'll go ahead and sell that and maybe we'll make a little bit of money. So we will receive cash. I'll debit cash. Price we're selling it for, $110,000. I'm going to skip a space. I want to remove the investment from the books because if I'm selling it, I no longer have it. So I will credit investment in Apple AFS to remove it from the books. Now, what was the value of it? Again, here's where the labeling comes in handy. Right up here was my investment in Apple AFS. I paid $100,000 for it. So I will credit it to take it off the books at $100,000. The difference there is $10,000. And what is that? That is simply a gain. It's a gain on the sale of that stock. So that worked out pretty good. Then we have on March the 30th, we're going to go ahead and record our quarterly fair value adjustment. And they're telling me that right now the Walmart stock is valued at $53 a share. Now remember, any stock that we own, we have to do these adjustments. Some companies do these annually. They're going to do the adjustment quarterly. So since it's the end of March, January, February, March, it's the end of the first quarter. Now when we do these adjustments, we're only going to do these adjustments for investments that we still own. So if we go back and look at it, we had that Apple investment, but we sold it. So right now, The only investment that we really have is that Walmart investment. Now, we paid $55,000 for that investment. Question is, how many shares was that? Well, go back up here and look at that transaction. Back when we paid that $55,000, that was for 1,000 shares. So that means we paid $55 per share. Well, now the market price is only $53. So that's a difference of $2 per share. And since we own 1,000, that's going to be a difference of $2,000. Now, as far as our titles are concerned, I'm going to debit unrealized loss. Why is that a loss? Because my $55,000 investment at this point really is only worth $53,000. So that's a loss of $2,000. And remember, losses are always on the debit side, but it's an unrealized loss. It won't actually be a loss until I actually sell the investment. So this is just a speculation, so it's unrealized. And then I will debit fair value adjustment. So that would be the proper way to record that transaction. Now on April 1st, we've decided to go ahead and sell the Walmart investment. Look at this, it's gone down in price even more. Now it's gone down to $52,000. So if it's headed in that direction, we probably do need to go ahead and sell it before it gets any lower. So we will receive cash. We're going to get rid of the investment Walmart AFS for available for sale. Now, when we initially bought this, the initial price $55,000. We're selling it for $52,000. There's a difference there. It's a difference of $3,000, and it's a difference on the debit side. That is a loss. We lost $3,000 on that investment. And you know, some people would say, why would we knowingly do that? Well, if it's headed in that direction, maybe it's better to go ahead and get rid of it. Then again, maybe we should wait it out, but you never really know what to do. The next transaction is on April the 30th. We purchased merchandise from the Garcia Company of Mexico. It was purchased for 10,000 pesos. Payment is due in 30 days, and on that day the exchange rate is 0.0925. So this is really a purchase. Now we had one of these international transactions earlier, but that was a sale. This is a purchase. So we're purchasing merchandise inventory. That's the asset. It said that payment was due within so many days. That means we charged it. So that would be accounts payable Garcia. We want to label that, so that'll make it a little bit handier. And then we got to figure out the amount. It's 10,000 pesos, but it's 0.0925. So 10,000 times 0.0925, 10,000 pesos is actually only $925. So that takes care of that one. And then the final transaction is on May the 30th. We're finally going to pay the balance due to Garcia Company, and at that date the exchange rate is 0.0921. So this is on May 30th. We're going to pay this, so that means I can actually get rid of the liability. So I'll remove that liability. I'd booked it at what amount? $925. I'm going to skip a space and come down here and credit cash. Now when I pay for this, I might pay a little more than that. I might pay a little less. It depends on how the rate has fluctuated. So now the rate is 0.0921. So 10,000 pesos times 0.0921, that's 921. So that's the difference of 4. And that difference is on the credit side. Credit side means it's a gain. So that means it's a foreign exchange gain of $4. So that will resolve that particular transaction on May the 30th, and that also completes the example on investments.